Good morning, everybody. Welcome to the ARMR Report morning meeting. This is a show about stock market investing in what I call the millennial age. So we're using tools here like algorithms to manage our risk, and we do our research like we always did. We meet management teams of companies. We build a whiteboard of ideas we want to own, investment themes that we think are important, typically themes where we see a paradigmatic shift in perception of an industry, and we want to get in ahead of that floodgates opening of institutional investment into an industry. So this is the morning meeting. I try to keep this quick. I'll be back on air at 12 o'clock today to share some deeper thoughts into what groups we're following and what we're doing. I do want to give you a heads up. I've been off the desk for a couple of days for various reasons, and we've changed our investment stance a bit. So go to our website, take a look at it, rosenthalcapital.com. You can see our risk on, risk off monitor. We're in a mild risk on position, which is kind of an upgrade from minor risk from a couple of weeks ago. So we're slowly adding some of our favorite investment names that are at the top of our whiteboard into our portfolio. You'll see on that real-time risk on, risk off monitor that we've been investing in cannabis, precious metals, and energy. And we've been doing that for the last few weeks now, right? Really the whole year, 2019. We even focused on it last year. So those are the three groups that we're always focused on. So even though our big algorithms, or I should say our algorithms on the big indexes, are still telling us that the risk is high versus the reward potential from here. So we're not willing to be 100% committed to the market. We're not willing to go long the indexes on a multiple day basis. But what we are willing to do in this environment, which we've been saying for the last month, we recognize that the markets are going higher. And so we're putting on risk in our favorite investment themes, number one being cannabis, which you all know. Please check out our YouTube playlist of our cannabis investment theme. The last week we did a three-part series on why understanding the opportunity in the cannabis super cycle is so important right now. You could take a look at those videos, and you'll understand step by step why it's important to take this group seriously as an investor for the next 3 to 5 to 10 years, and then how the group breaks down, and then what stocks you want to own in that group. We kind of walked you through it, and we wrapped up with a discussion about the risks that are involved at the beginning of a super cycle of investment into a particular group or theme. We're at the very beginning of a super cycle of investing. You can go watch those 3 videos. You'll understand more what I'm saying. So we stay focused in that group. This week, there's a couple of earnings announcements, Telray, Canopy. Yesterday was Aurora, ACB. And so, I mean, this is not at the very beginning of an investing super cycle. Earnings really aren't the issue. It's the theme that's the issue, and it's the amount of money coming into the theme from investors that are on the institutional side that drives the assets higher. So PE has no place in the argument, and therefore the earnings announcements are really, there's volatility around them like there is with every earnings announcement, but any weakness because a cannabis company, quote, misses the number is a gift for the investor. It's not that I run out there and buy it immediately, but I'm looking for weakness because earnings weren't enough. This is not an earnings story. It's a whole investment theme that's unfolding. And so what we want to do is buy weakness, and particularly weakness that's short-sighted. And caring about earnings at this stage is short-sighted. So any weakness on that, boom, that's where we're going to want to step up. We only have a third of our exposure on in our portfolios in the cannabis space. You could call that third kind of our core. We're not really, our stops are very wide on that third. We are allowing for a lot of volatility. We're willing to suffer the swings. On weakness, we want to double and triple our position size. If it just takes off and runs, we'll make some money, and then we'll look for the next consolidation base at higher levels. So anyway, it's very interesting, I think, to see how Telray and Canopy behave this week, and ACB, by the way, which is Aurora. Let's see, do they move higher on earnings? Because it doesn't really matter. If they do, I'm not going to buy into that. But if they sell off, that might offer us an opportunity to add some to our portfolio. All right, so the last couple of days we've had gap ups, we've had gap and goes. I've been stalking the bear, looking for this downtrend to reassert itself. It's not doing that, and so we've upgraded our market expectations to mild risk on from minor risk on. We're adding a little bit more, and what we do to add more in an environment like this is we go to our whiteboard, find our favorite names that we've been looking to invest in, look for risk on entry points using our algorithms, and commit some capital there. And so that's what we've done. You can see that in our model portfolios we call miscellaneous, which I've kind of renamed to whiteboard. It's our whiteboard investments, our favorite names that are outside of the three themes that we've talked about. So not the cannabis, precious metals, or energy space, but other names. I'll give you an example. We are big owners. In fact, our biggest position in the whiteboard space is iRobot. We bought it in front of earnings. The earnings were phenomenal. We think the stock is a big time success over a long period of time. Stock's already up 25% in the last 4 days. We bought it last week. Great risk on entry point using our algorithm. Earnings delivered, which is what we expected based on our research. So there's how we run money. You want it in a nutshell or focused? That's what we do on our trading desk. Fundamental research. We expected a good number out of iRobot. We did our research. We did our homework. We waited. It came down to the right price. The algorithm told us risk versus reward is appropriate. Put the capital to work. We did it. They announced earnings, blew the street out, and there's the confluence. We get great fundamental announcements based on our research, coupled with the execution algorithms, and the stock's up 25% in 5 days. Okay, that's what we're trying to do with every position on the whiteboard. So we've added some of our favorite whiteboard names that fit that criteria. Okay. Anyway, I wish you guys the best of luck trading this morning. I mean, every day the market gaps up. Strength I look to short, and sell-offs I look to get high. I look to buy. So not doing. It looks like a gap up again this morning. So if anything, I'm looking for reasons to get short and for that gap to close, which would work well as a hedge versus the positions I have in the portfolio. So day trading is completely different from investing. All right. So anyway, that's a couple thoughts for you. The gap up, I'm looking for gap closures, see if I can make some money short during the day. And if not, if it just runs away, then great. We have our exposure, we make money. All right, guys, listen, good luck out there. I'll see you 12 o'clock today, and we'll get into some more detail about what we own.